Hey everyone, welcome back. Today I want to talk about something really close to my heart, my own stupid investment mistakes. I am not some guru, I am just a regular guy who messed up a lot with money. So consider this a chat with a friend who has been there, lost that. When I was in my early 20s, I was just like most of you probably are now. I saw all these headlines about people getting rich quick, about some hot stock or crypto coin making overnight millionaires. I had this burning desire to get rich fast, to skip all the boring parts and just wake up wealthy. My family, well, we were pretty average, so there was no safety net, no rich uncle to bail me out. It was all on me, and that pressure, combined with a serious lack of understanding, led me down some really dumb paths. I remember my first real dive into investing. I put quotes around that because looking back, it was pure gambling. I heard about this one stock. Everyone was talking about it, saying it was the next big thing. I did not do any research. I did not understand the company. I did not even know what a balance sheet was. All I knew was that people were making money, and I wanted in. So I poured a significant chunk of my savings into it. It shot up a little, and I felt like a genius. I was already picturing my new life. Fancy cars, big house, all that nonsense. Then, it crashed. Not a slow decline, but a full-on, gut-wrenching plunge. I watched my money evaporate day after day, and I was paralyzed. I did not know when to sell, when to cut my losses. I just hoped it would come back. It did not. That was my first major punch in the gut. And it hurt, really badly. It was not just the money, it was the feeling of being so incredibly naive and foolish. I felt like I had squandered not just my money, but also the trust I had placed in myself to make smart decisions. It was a really humbling experience, and one that should have taught me a lot, but I was still pretty hard-headed. After that, you would think I learned my lesson, right? Nope. I moved on to the next shiny object, short-term trading. I was convinced I could outsmart the market, buy low, sell high, rinse and repeat. I spent hours staring at charts, trying to predict movements, reading every expert opinion I could find. It was exhausting, and honestly, mostly unprofitable. I was chasing trends, getting in late, and getting out even later, always buying at the peak and selling at the trough. My emotions were running the show. Every little dip sent me into a panic. Every small gain made me feel invincible. It was a vicious cycle of euphoria and despair, and my bank account reflected that roller coaster. I was constantly glued to my phone, checking prices, unable to focus on anything else. It was not just financially draining, it was mentally exhausting. I remember missing out on social events, just staring at my screen, hoping for a turnaround that never came. The stress was immense, and it affected everything else in my life. My sleep suffered, my relationships were strained, all because I was obsessed with these short-term gains that never materialized. Then came the scams. Oh, the scams. When you are desperate to make money, you become vulnerable. I fell for a couple of guaranteed return schemes that promised ridiculous profits with zero risk. Looking back, it is so obvious now that they were scams, but at the time, I was so blinded by the promise of easy money that I ignored all the red flags. They asked for more and more money, always with some excuse about unlocking bigger returns, and I kept sending it, convinced that this was finally my break, until, one day, they just vanished. Poof, gone, and with them, more of my hard-earned savings. That was a really dark period. I felt so ashamed, so stupid, and so utterly defeated. It was not just about losing money, it was about losing trust in myself and in others. I remember feeling a deep sense of embarrassment, not wanting to tell anyone what had happened. It was a painful secret that weighed heavily on me. It made me question my own judgment and intelligence. One of my biggest and most costly mistakes was not understanding risk management. I would go all in, put everything I had into one or two investments, believing they were sure things. I heard about diversification, but I thought it was for old people, for those who did not want to get rich fast. I learned the hard way that putting all your eggs in one basket is a recipe for disaster. When those sure things went south, I had nothing left. No backup, no plan B. Just a gaping hole in my finances, and a huge amount of regret. I realize now that a balanced portfolio, even if it means slower growth, is the only sustainable way to build wealth. It is about protecting your downside as much as it is about capturing upside. I genuinely believed I was smarter than everyone else, that I had found a loophole. That arrogance cost me dearly. My emotional trading habits were probably the most destructive. I was constantly making decisions based on fear and greed. If everyone was buying, I would buy, even if the price was crazy high. If everyone was selling, I would panic sell, even if it meant locking in huge losses. I could not detach myself from the market fluctuations. Every red number felt like a personal attack. Every green number felt like a confirmation of my brilliance. It was not rational. It was not strategic. It was just pure, unadulterated emotion driving my financial choices. And emotions, as I learned, are terrible financial advisors. I would check my portfolio dozens of times a day, letting every tiny fluctuation impact my mood. It was an unhealthy obsession that took a serious toll on my mental well-being. I was never truly present, always thinking about the next market move. After hitting rock bottom, after seeing years of hard work and savings just disappear, something finally clicked. I was tired of the anxiety, the constant worry, the feeling of being out of control. I realized that my approach was fundamentally flawed. I had to unlearn everything I thought I knew about making money and start from scratch. This was not an overnight realization. It was a slow, painful process of introspection and self-blame, followed by a fierce determination to change. I finally accepted that my pursuit of quick wealth was actually making me poorer and unhappier. I started reading, really reading about proper investing. Not the get-rich, quick stuff, but the boring foundational knowledge that actually builds wealth. I learned about long-term investing, about compound interest, about asset allocation, about understanding a company's fundamentals. I started with the absolute basics, like setting up an emergency fund, something I had always neglected in my pursuit of high returns. It felt slow, almost painfully slow, compared to the adrenaline rush of speculative trading, but for the first time it felt stable, reliable. It was like learning to walk again after trying to fly before I could even crawl. I devoured books by legendary investors, not for their stock picks, but for their philosophy and their disciplined approach. I learned that true wealth is not about flashy gains, but about consistency, patience, and a deep understanding of your own financial situation and goals. I embraced a mindset of slow and steady wins the race. I focused on building a solid financial foundation, on consistent saving, and on low-cost, diversified investments. I learned to ignore the noise, to stop chasing headlines, and to focus on my own financial goals. It was a massive shift in perspective from trying to beat the market to simply participating in its long-term growth. This new approach brought a sense of calm and control that I had never experienced before with my money. I no longer felt the urge to constantly check my portfolio or react to every news cycle. My investments were working for me, slowly but surely. In the background now, my goal is not to get rich overnight. My goal is to build financial security, to have peace of mind, and to avoid making the same boneheaded mistakes I made. And that is why I am sharing all of this with you. I want to be that friend who tells you what not to do, so you do not have to learn it the hard way. Like I did, my journey has been messy and expensive, but it has taught me invaluable lessons. I truly believe that if I can learn from these mistakes, anyone can. It just requires a willingness to be honest with yourself and to embrace a more disciplined approach. So, let's talk about some of the core lessons I have learned. The bottom line for anyone in their 20s trying to figure out this money thing. These are the things I wish someone had hammered into my head when I was younger. First, forget about getting rich quick. Seriously, just erase that idea from your brain. The vast majority of people who chase quick riches end up losing their shirts. Wealth is built over time, through consistent effort, smart choices, and patience. It is not glamorous, but it works. The stories you hear about overnight success are almost always exceptions, not the rule, and they often gloss over years of hard work and risk. Focus on building sustainable habits, not on chasing fleeting opportunities. Second, understand what you are investing in. If you cannot explain it simply, do not put your money into it. Do your homework. Research the company, understand its business model, its finances, its risks. Do not just buy something because your friend told you to or because it is trending on social. Not investing. A little knowledge goes a very long way in protecting your capital. Never invest in something you do not understand, no matter how tempting the potential returns seem. Third, risk management is everything. Never ever put all your eggs in one basket. If one investment goes south, your entire portfolio is not wiped out. It is like having multiple streams of income. So if one dries up, you still have others. This principle alone would have saved me so much heartache and money in my earlier years. Think of it as building a robust ship that can weather any storm, rather than a flimsy raft that sinks at the first ripple. Fourth, control your emotions. This is probably the hardest one. The market will go up, it will go down. There will be times when everyone is panicking, and times when everyone is celebrating. Do not let those emotions dictate your decisions. Stick to your plan, stay disciplined, and avoid making impulsive moves based on fear or greed. If you have a long-term plan, stick to it. Emotional decisions are almost always bad decisions in the world of investing. Develop a calm, rational approach and trust your research over your gut feelings during volatile times. Fifth, beware of scams. And be true promises. If someone is guaranteeing high returns with no risk, run seriously, run fast. There is no such thing as a free lunch in investing. If it sounds too good to be true, it almost certainly is. Protect your money. Scammers prey on hope and desperation, so be extra vigilant, especially when dealing with unsolicited offers or high-pressure sales tactics. Always verify, always question. Sixth, educate yourself, read books, listen to podcasts, follow reputable financial educators. The more you understand about personal finance and investing, the better equipped you will be to make smart decisions and avoid pitfalls. Knowledge is your best defense against bad investments and scams. It empowers you to make informed choices and to understand why certain strategies work and others do not. Never stop learning. The financial world is constantly evolving. Seventh, focus on what you can control. You cannot control the stock market, interest rates, or the economy, but you can control how much you save, how much you spend, how much debt you take on, and how you educate yourself. Focus your energy on those things. Direct your efforts towards the areas where you can actually make a difference, rather than agonizing over external factors beyond your influence. This shift in focus brings immense peace of mind. Eighth, start early, even with small amounts. Compound interest is a powerful force. Even saving and investing a small amount consistently can lead to significant wealth over decades. The earlier you start, the better. Time is your greatest ally in building wealth, so harness it from as young an age as possible. Do not wait until you have enough money. Just start with what you have. Ninth, remember that setbacks are part of the journey. You will make mistakes. You will lose money sometimes. That is inevitable. The key is to learn from those mistakes, adjust your strategy, and keep moving forward. Do not let a setback derail your entire financial plan. Every failure is a lesson in disguise, an opportunity to refine your approach and become a more resilient investor. It is about progress, not perfection. 10th, define your financial goals. What are you saving for? A down payment on a house, retirement, a child's education. Having clear goals will give you a purpose for your money and help you stay motivated and disciplined. Without goals, it is easy to drift and make impulsive decisions. Your goals are your roadmap, guiding your financial decisions and keeping you on track, especially when temptations arise. So, that is my story, in a nutshell. A whole lot of pain, a whole lot of lessons, and hopefully some wisdom I can pass on to you. I am not perfect. I am still learning, but I am much smarter now than I was then, and I want you to be too. Let's build a future where we are all financially confident and secure. Not because we got lucky, but because we made smart, informed choices. Thanks for listening. I will see you in the next video.